Stock market today analysis for Wednesday, April 5th, 2023. Let's cut to the chase. You can go to ifsuccess.com. It's all about learning how to sell cash secured put options. We got free stuff. We got paid stuff. Hey, if you're not making money in the stock market right now in 2023, I believe that if you have an internet connection, a bank account, and you spend money at least once a year, then you ain't got no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. Maybe you don't know how to figure out which stocks you'd be happy to own. That's why I got this YouTube playlist here for you with these free downloads. You can check that stuff out under the free stuff. Let's say you need a little more help. You can get this paid version. I'm going to be upfront with you. It's not cheap because I'm, golly gee, 100% worth it. If you're wondering why you should be selling cash secured put options on stocks you'd be happy to own, then check this link out. Boom! Right there. That's going to give you a video with 5 reasons why you should be doing this. Because sometimes if you know the reasons why, figuring out the how-to is a lot easier. And with IHaveSuccess.com, it's even easier to figure out the how-tos of selling cash secured put options on stocks you'd be happy to own. Let's get into looking at some market stuff. Feel free to contact me here if you want, or with a little comment on this video. We are in Wednesday now. We had these big announcements coming out. And we got some big announcement coming out on Thursday and Friday. And let's take a quick look over here. Look at Wall Street shuns risk as recession talks ramp up. Hey, if you depends on how you define a recession. Joe Biden and Janet Yellen changed their definition of recession. Just like maybe if you're married, you can just change the definition of marriage so you can start doing whatever you want when your wife says like, oh, you're not supposed to be doing that. We're married. Like, no, this is the new definition of marriage. But the point is like, I think the recession stuff's been around for a while, but who am I? Who am I? No one's calling me up. CNBC doesn't call me up. I haven't wrote a book. I don't have anything like that. Deep recession experts. So we went from banking crisis news to recession news, deposit outflows, shine light on Fed program, stocks wobble, NASDAQ sinks as gold rallies to all-time highs. Why is gold rallying to all-time highs if gold is just not, if it doesn't have any value? I think some people been feeding you a line of cock-a-doodle-doo. The heat map here, more red than green, but it is a little mixture of red and green. Look at that, utilities all green, and so kind of a mixture. What do we see? We still have more declining than advancing. Definitely over 50%, getting close to 65%. Hitting new lows again. Wow, 80%, and below the 50-day moving average, 66, creeping up again. 56 below the 200-day moving average. So even if some of these, big name stocks are moving up, I think the broad market overall moving down. This is what I take a peekaboo at to look at the general markets. I look at the dollar via UUP. Some people like to use the Dixie. For some reason, I use UUP. And then I think the Dixie is more of looking at currency, the dollar compared to other currencies, and maybe UUP is what, I don't know. That's just what I've been using for, going back to like 2011 or something like that. So dollars still continue to move down. TLT, which is basically kind of a representation for 20-year bonds, starting to bounce up, right? Look, it was really pushing against this 200-day moving average, and boop, kind of broke against that. Broke against it here, went back down, right? Broke against it here, went back down. But right now, these, when it broke against, it was red. Is it going to make a difference being green? We will find out. Gold, getting ready to do that all-time high stuff. It made a 1-month all-time high right here, kind of moving up. And oil, still moving at the top end of this range here. Bitcoin, still just basically moving sideways. Volatility index, which has the reputation of the fear meter. I'm not sure if it's an accurate representation of fear anymore or not. I'm not sure. I'm not sure if the 0 DTE options have really thrown that off. I don't know. That's a question that needs to be answered by people with more experience and understanding of how the VIX is calculated than I have. But we see it's low, right? It's low down here compared to being up here 130. And today in the 4 indices, right? For several trading days we were moving up in a lot of these indices. Not as much up here, and the small mid-cap stocks took the turn first. Now we're seeing the NASDAQ pull back. We're pulling back to where this last bull candle was. Kind of in the middle, higher, we're in the top 50% over here in the Dow Jones. And of this big bull candle, we're still in the top 50%, but maybe topping out. Let's look at what's happening in these 12 sectors. Notable that healthcare is starting to really show some strength while technology is going down. Banking sector, financials, I guess that would be more accurate than banking sector. Still looking kind of bling, really hitting this around 31 or hitting the 32. It's probably the $32 range, hitting this resistance there. Everything kind of a lot of stuff going down. Okay, we got utilities spiking up, consumer staples going up, but looking on these weak candles, but nonetheless it's moving up in this very, very steep incline here. Some extra volume coming in, probably some big institutional money somehow. And let's see how the big names shook out today. So here's the S&P 500 pulling back, right? As I have been saying on some of these videos, as we get closer to this 420 back here, we want to see what's going to happen between 420 and 440, and how does it happen. During that time, what happened is it went the opposite way, and it was under 400 for a while. Now it's back above 400, and then what's it going to do? It was kind of staying around in the middle between around the 410ish, right? Give or take a couple bucks either way. But we want to see what's going to happen. Is it going to be a repeat of the past, or is it going to this time break above this 415 resistance area? Apple pulled back a bit today. Still in a little bit of a bull trend, though. I don't think this is enough of a pullback for me to feel that the bull trend is over in Apple. Microsoft, similar look, but a little choppier, a little more volatile as it's moving up. But this 2-day pullback isn't enough for me to think that we got a change in short-term trend on Microsoft. Amazon, there's looking at the top 10 stocks of these different indices. They basically I noticed a similar pattern of about three different similar patterns. One looks like this. Got this Amazon look, Tesla, Google. Watch this. Google is going to look relatively close. One difference though is we're getting over the 200-day moving average here. But see what I mean as far as like it tried to get up to the 200-day. It got over the 200-day, broke down. I was trying to get up to the 200-day. Watch this. Tesla looks kind of the same too, right? Amazon and Tesla look closer than Google, but Google's still sort of the same if you contrast that with this and this. And then JP Morgan Chase, there's some stocks that kind of have this look, although they're more in this range. When we look through Berkshire Hathaway, I think that one kind of has that look too. Yep, kind of like there. We looked at Tesla. Nvidia, it's more of the Amazon or the Apple type of look. What did we miss? Did we miss anything here? Did we get Meta? Right, Meta, looking like that. And then, interestingly enough, for some reasons that are probably something that people don't want to on the face admit. And I mean, when I say people, I mean the people that actually make these decisions. They probably don't want to admit the real reason why, but on the NASDAQ and the S&P 500, the top 10 holdings are basically the same. Apple, Microsoft, Amazon, Google, Meta, Tesla. Look at Google again. You know, out of 2 different indices, Google has like 4 times the weighting. What's the sense of that? Like what about all this diversity and inclusion that people are talking about? There's no diversity and inclusion in the top 10 between the Qs and S&P 500. But we do, let's take a look at it. We do have some different ones. Overall, we're still seeing this higher low on the short time frame. But what about on a year time frame? Look at that. Let's even look at about a 5-year time frame. Right, 5-year time frame, we're potentially bottoming out here. Got a little bit of a W. Really want to get above this one. We'll see if that is going to happen. It seems like through this area is a lot of resistance. We will definitely be watching to see. So we looked at Apple, we looked at Facebook, or whatever company that is, Microsoft. We looked at Amazon, we looked at Google, we looked at Meta, we looked at Tesla, we looked at Google like 4 or 5 times already because I double clicked it. Nvidia, we looked at PayPal. I haven't looked at that one. PayPal's kind of got that same Tesla, Google, Amazon look. Adobe, kind of in between all of them, right? Google is a little more trying to establish that, trying to get over the 200-day to keep moving over. So why would they have so much overlap? I honestly don't think that whatever BS they come up with is going to be the real reason. I think they like to do that in order to keep stuff higher, because people that vote, if they have 401ks, they like to be able to point at the politicians like to be able to point at the stock market and say, look how high the stock market is. Look at these indices. Dow Jones. This is a bit of a similar pattern here too. We got a few stocks that are ripping up, really in a good bull trend. We got some stocks that are trying to get above the 200-day, but struggling to do that. Some of them kind of are. And then we got other stocks that are like above the 200-day and just kind of moving sideways in a range, which is real similar to this type of look. Strong couple days over here in United Health Group, which is a really, really volatile stock. Like if I was living on the Eastern Standard Time Zone, not over here in Hawaii when I have to wake up at 3 in the morning, this would be one I would potentially look at day trading because this bugger moves. Goldman Sachs is trying to recover from this banking crisis, right? It was above the 200-day moving average in this big range, but basically sideways from right through here until we had these banking problems, and it came across. Even when I think CEO of Goldman Sachs is just getting caught doing all this stuff that you wouldn't want to trust your money to, someone that's out in the clubs doing a bunch of crazy, I don't know if it's crazy, but stuff like dealing with nightclub life. Probably, I don't know for this, but I'm sure every time I've been to a nightclub, you know what they were doing. They were doing some white lines. So if you're letting the ladies perform that type of stuff on you, you're probably doing some white lines too. Goldman Sachs, you got to clean up your image. You don't have to. You guys can look like a bunch of bums if you want. You can have not bums. You can look like a bunch of wealthy, rich kids, trust fund kids that people wouldn't want to really trust their money to. You can do that, no problem. Home Depot is in this trading range. Home Depot, maybe you want to, if you have the type of cash, if you're just going to buy 1 or 2 shares of Home Depot, that might not be it. But if you got, you got the type of cash where you can be buying like 100 shares, maybe you should look at the fundamentals. Maybe you should look at the enterprise value to EBITDA, see where Home Depot might be a good buy. Maybe check out Home Depot's free cash flow, see if it's something that might interest you. I don't know. I just heard that it's a cash flow cow. I haven't really looked at it myself. You can take a look at Microsoft, we already looked at. Salesforce, another one that's been in a pretty good uptrend. McDonald's broke out of the sideways range. Ooh, doggies. I am so glad that I did not sell that Iron Condor. I was really looking at selling this Iron Condor for about 30 days to expiration on McDonald's with I think I was going to do like maybe a short call at 280 Maybe my long call over here at 285, or was it 285 and 290? I don't know, but that side of the iron condor would have got tested. Definitely kind of breaking out of that range. So if you don't know how to adjust those, then you probably shouldn't be doing those. And Honeywell still kind of going down. Verizon, Visa, it's doing this above the 200-day moving average, moving sideways, and kind of been in this range. Not as range bound as McDonald's was looking, right? That was like up and down range bound. Amgen, all right, it made this bull run up. Have to see if it's going to break out of that. Boeing, good example of this sort of right. That look, right? Not this one took a dip down, but very, very similar to McDonald's, right? This one broke out this way, but this is what McDonald's is kind of looking like for a while. Some other stocks doing that. Let's follow this up. Take a look at the Russell 2000 below this 200-day moving average, if that matters. And looking weak. This is looking like the weaker of the four different indices. And AMC, wasn't this one of the darlings of the meme stock people? They were talking about AMC's going to the moon. It might, I don't see how that's possible, but I don't want to be the one to tell the Wright brothers they can't build an airplane. But I just don't see this going to the moon at the moment. Like it's got a little bit of ways. You definitely got to get above 16 before you can go to the moon. And right now it's not even getting above 8, right? Over here it got above 8 and couldn't get past 915. And so I don't know. It's not looking moonish. If you're ready for the moonshot, maybe you should wait till you get some confirmation. Maybe if you're looking to take that moonshot on AMC, maybe you should wait at least until it gets over the 200-day moving average. I mean, if it's going to the moon, it's okay if you buy it at $10, right? Because $10 to the moon, you still a pretty good profit. I don't know what number going to the moon is, but it's probably at least over 200. So you buy at 10, if you cash out at 200, you still made a lot of money, and you don't have to sit in a depreciating asset in the meantime. That I don't even know if this pays any dividend. I think I looked at the options on this. I think it was just totally crummy on the option side, even though implied volatility, look at this. Huge implied volatility, but for 30 days, let's say you're to sell, it's like, 30 days. I would not want to be selling. I wouldn't. It's not that I wouldn't want to. I just wouldn't sell a cash secured put option on this. I don't want to own the stock by any means. And if I was going to sell something, I'd probably be playing the short side, selling some naked calls on it. But don't do that if you don't know how to do it. Anyways, I don't think the premium is super good. Like for having a over 250% implied volatility, I would expect a little bit better premium than that. I don't think it's worth it. And we got Shockwave moving on up. Nice and easy move up there, right? How far is that going to go? Biohaven, they got it in the top 10. It doesn't even have a 200-day moving average. It's like, I guess this is relatively new stock. I'm curious. I would like to find out how they decide to put which stocks in here. And I don't mean what they tell to the public. I mean how they really decide. All right, this one, we got this kind of Tesla, Amazon, Google look, right? Moved up here. Difference is Google is boom, boom. I think Google is a little bit above that right now. Crocs doing this above the 200-day moving average, moving sideways. And what is this? Chart Industries below the 200-day moving average, really sold off, kind of going sideways. This one, volatility, it's just moving down smoothly in this channel. But let's see. It seems like it might be catching some support around the 180-ish. I don't know, 175, 180, somewhere in there. Pelios moving. Pelios, I don't know how to pronounce that stuff. But that seems to be You know, this is one is definitely gappy. That is a gapper. So what are you gonna do? I don't know what you're gonna do. I really don't, because I don't even know you. If I do know you, I don't know that you're watching this. So I can't tell you what you're gonna do. I have no clue what you're gonna do, but I know what I'm gonna do. I'll tell you what I'm gonna do. I'm gonna continue to sell cash secured put options on stocks that I'd be happy to own. Some of these stocks I'm doing more of the wheel strategy. Some of these stocks I'm building a long-term portfolio. While I'm doing that, I'm going to take some speculative positions on a variety of things. Maybe I'll sell some naked calls on meme stocks at certain times when they run up. But I know how to manage that. If you don't really know how to manage selling naked things, if you don't know how to adjust the naked position into a covered position, or if you don't know how to go from undefined risk to defined risk, then don't put yourself in that position. Right? Trade to your level of management versus trading to make the money you want to make. Right? Even though I'm really not a big Warren Buffett fan, there's some things I don't mind quoting from him, even though I don't think he's the nice grandpa that he makes himself out to be. But regardless of that, rule number 1, don't lose money. Rule number 2, remember rule number 1. So trade to your management ability first. Trade not to lose money. If you break even, that's a success, because you didn't lose money. If you can keep your money, you keep breaking even and make money, it will grow. When you start losing money, then you basically, if you lose $1, you need to if you lose $1 and then you make $1, then you're back at even, right? So you need to, in order to be ahead, if you lose 1, you need to make 2. So losing is not good, because then you need to, it's basically like when you lose, then you need to double what you made in order to make anything. Or maybe it's not always double, but if you lose $50, then you make $50, you're just back at break even. But if you keep breaking even, you're just breaking even and you're making some money, then you're still slowly growing that pile. I hope that makes some sense. The biggest thing out of this is protect your money. Trade to your level of management. Don't get blinded by the light of the greed, that green light. Don't get blinded by that. YouTube is full of all these things. You can make all this money doing this just by looking at 3 patterns. Blah 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 blah. How about this? How can you manage your money? How can you manage risk? If you manage risk, eventually you'll make money. If you just go for making money, good luck. Let me know how it works. And don't just tell me, let's open up your account. I can remote view in, right? We can do a Zoom. We open up your bank account. We open up your brokerage accounts, and let me audit it. That's how you show me. I don't listen to words. I want to see the facts. All right? You guys have a fantastic day. Aloha.